So I want to talk about two stocks in this video. One is going to be a little bit of news on Tesla. Musk courts Chinese officials seeking approval for Tesla's self-driving technology, which would be pretty cool if they pull it off in China as well. There might be, well, I don't know. China's probably going to be a little bit more lenient on the full self-driving than the U.S., but we'll see. More so because I think, regulators, officials, and politicians don't really like Elon Musk that much. And so they're attacking Tesla as, a way to get back at him. You know what I mean? For Twitter and everything else Elon's been doing recently. But let's read about this. So Elon Musk met with senior Chinese officials in Beijing on Sunday as he pushes for approval to introduce Tesla's advanced driver assistance technology in its biggest overseas market, where it has been losing ground to homegrown electric vehicle makers. There's my argument. Okay, maybe they've been losing ground, or maybe not. This is what I'm talking about. How this article is written, because Tesla's still king dingling in the Chinese market. They still deliver more cars than every other one of those companies, and every other one of those companies also lost a significant amount of ground in their sales over the last, quarter, right? Or two, probably coming up. We'll find out, right? Musk is stepping up its efforts globally for a wider adoption of Tesla's full self-driving, or FSD, software feature after a dismal start to the year for the world's most valuable automaker, which saw its first quarter profit drop to its lowest level since 2021. Tesla's chief executive is seeking to persuade Chinese regulators to greenlight the introduction of its FSD feature to Chinese drivers. According to people familiar with the discussions, among those he met with was Chinese Premier Li Guang. I'm guessing that's wrong. Kang. Who knows his real name? Or how to pronounce it. I don't know. Tesla has opened FSD for subscription in China, but it only provides lower-level autonomous features for use, leaving it lagging behind EVs made by some Chinese brands that can drive near automatically in most scenarios. In China, Tesla faces government restrictions over the data its cars can collect near sensitive sites, and it isn't allowed to transfer its Chinese data out of the country. Musk would like to transfer data to the U.S. to create a bigger pool that could better train the driver assistance feature, the people said. That is a potentially thorny issue given Beijing regards protecting such data as a matter of national security. Okay, right? Failure to win approval for FSD could erode the attractiveness of Tesla cars in the world's most crowded EV market. Tesla last week halved the subscription price of FSD in the U.S. to entice adoption. On Friday, the National Highway Traffic Safety Administration opened an investigation into Tesla's more basic driver assistance system, which the authority said is tied to avoidable crashes and fatalities. This is debatable. Tied to... That's such a bad argument, because these people know that, one, the car doesn't completely drive itself, and two, you can't control other drivers on the road. You know what I mean? You really can't. And so Tesla could have been doing everything right and still gotten a fatal accident. Me being a tractor trailer driver, I know this. People do dumb stuff all the time, and there's nothing anybody else on the road can do. Like, I saw two guys flying on bikes, a group of them rather, but two of them died. And it's because of their own fault, of their own reckless behavior, and they could have killed somebody else or wrecked somebody else and killed them, and it wouldn't have been that other person's fault. And so how can you put all the blame on Tesla just because someone was involved in a fatal crash? Tesla didn't respond to a request for comment on the probe, right? Tesla faces mounting challenges amid a broader cooling in consumer demand for EVs. This is an entire market thing, not just EVs, but cars in general. just because rates are just 5%, whereas before they weren't. And people loaded up on cars and houses when rates were, so low. And how could you blame them, right? So Tesla faces mounting challenges amid a broader cooling and consumer demand for EVs. It is cutting more than 10% of global workforce after it reported falling revenue in the first quarter of the year and a sharp drop in profit. Tesla sales in China of its vehicles made in the country slid last quarter by almost 4% from a year ago, while the rest of the EV market recorded 15% growth over the same period. Workers at Tesla's Shanghai factory said Sunday that they were asked to work on the weekend in anticipation of Musk's visit to the country. The plant is usually shut down on weekends after the country dialed back work shifts in March amid weakening demand. Last week, Musk postponed a trip to India, where he was expected to meet Indian Prime Minister Narendra Modi and unveil plans for Tesla's entry to the country. Tesla's development in China is a successful example of economic and trade cooperation between China and the U.S. The Chinese premier told Musk during their meeting Sunday, according to state broadcaster China Central Television, Tesla is willing to further deepen the cooperation with China, Musk told Lee. According to CCTV, Reuters earlier reported the visit. Tom Shu, a senior executive considered key to Tesla's growth in China, and Grace Diao, who oversees Tesla's external relations in the country, joined Musk's meeting with officials, who included China's top economic planner and commerce minister. Tesla's lofty market valuation rests in part on the promise of its driving technology. The FSD system is an advanced version of the company's autopilot technology and is designed to help with driving tasks such as steering and lane changes. We plan on, with the approval of regulators, releasing it as a supervised autonomy system in any market where we can get regulatory approval for that, which we think includes China, Musk said during Tesla's earnings call last week. The latest version of Tesla's self-driving capability is based only on artificial intelligence, and the company is working on expanding its core AI infrastructure and training capacity, Musk said during the call. Chief Financial Officer Vaibhav Taneja urged investors to regard Tesla as more than a car company. Tesla has emphasized on its website and in users' manuals that software doesn't allow for fully autonomous driving and requires active driver supervision. Tesla mainly relies on real-time visual data its car's cameras collect to power its driving assistance features instead of using optical radar signals to identify traffic. A technology route that most Chinese car makers and pretty much all EV or autonomous driving car makers use. All right. Earlier this month, Huawei Technology launched its camera-based autopilot technology, which the Chinese company said was more intelligent and powerful than Tesla's most advanced autopilot feature currently available in China. China has banned Tesla cars from entering military sites and venues of government agencies and state-owned companies over concerns that data collected by the vehicle could pose national security risks. The ban has been enforced more strictly in some cases, covering places including airports, train stations, and public parking lots at police stations. In recent years, concern over cybersecurity risks posed by data amassed by vehicles has promoted Beijing to require such data to be stored in China. Tesla has said that all data generated by its cars sold in China would be stored locally in a data center built in 2021. To improve its FSD capability and have the technology better work in Chinese traffic, Tesla will need data collection from China to help train technology. All right, so I'm going to talk about that specifically, right? And I want to go to something else. I'm going to go something else. So I'm going to work on this meta thing here for a second, but I want to talk about Tesla's full self-driving and how they're moving into not just China, but they're going to move into other markets, probably most likely definitely in Europe. Now they're going to face considerable traction problems in China just because the way China is. They want to control everything, and there's nothing anyone can do about that. Now, that would be a huge market for Tesla to be into, but you can't really think about like robo-taxi or anything like that in China anytime soon. Let's be honest about that. Has Tesla been beat up lately? I think it's a buy. I think it's going to smash coming over the next 5-10 years, and we're really going to see something. But what I want to say is that like Tesla is not just a car company, although they are a car company, but they are going to do Optimus, amongst other things, robo-taxis, full self-driving, energy business. It's all growing. Except the auto business hasn't grown. This is going to be a throwaway year. It's probably growing this year, right? But should we be worried about that, or we should, as an investor, should you take advantage of the opportunity that's being presented at the moment in time? And I think that that's one big thing you ought to do is be very vigilant on the idea that these shares aren't going to be this cheap for long. And maybe this year is a year where you build up a position. I know you want to see green. As an investor, you always want to see green. You don't want to see the ugly. You don't want to see the red. You don't want to be in the red. But if given the chance to make a lot of money 3 years from now, let's say 5 years from now, 5 years from now, given a chance to make a lot of money 3 to 5 years from now, if you just load it up this year and you could retire in 5 years, would you do that? You know what I mean? Would you do that? Would that make sense for you? Yeah, you might not have the sexiest gains over the next year or two. But in 3 to 5 years, if you retire, you'd probably be pretty freaking happy, in my opinion. I don't know. But let's talk about Meta and how Meta got smoked, baby, on earnings. All right, let's take a look. This is going to be, a press release issued by Meta on earnings. It's been a good start to the year, said Mark Zuckerberg, Meta founder and CEO. The new version of Meta AI with Llama 3 is another step towards building the world's leading AI. We're seeing healthy growth across our apps, and we continue making steady progress building the metaverse as well. Now, Wall Street is crushing them over this metaverse thing. But what do we know about Facebook? Facebook was ahead of its time, and it became the thing, right? Now, they have Instagram, WhatsApp, the Ray-Ban glasses. Maybe metaverse, they're just ahead of their time. Now, me personally, am I going to be participating in the metaverse? Probably not. But who knows what the future holds? And Meta's been pretty good. Facebook's been pretty good at seeing that shit and capturing it. So maybe, just maybe, they have it right this time again. They're just early. You know what I mean? You ever been right, but too early? That being said, revenue was 36.4 billion, right? A 27% increase year over year. Costs and expenses is up, but not by a ton. But, that's another thing that got hammered on by Wall Street is the costs and expenses were going to go up. But they're spending heavily on this AI. And I think that, honestly, they're going to be the winner in the large language model area. But who knows? Maybe not, right? But they're definitely going to be one of the leaders. And they definitely are spending massive amounts. Mega bullish for NVIDIA, BT dubs. All right. So operating margin, 38%. Up a whole 13, it was 25% in the same quarter last year. So it's 38%. That's a huge move, right? provisions. Their net income was 12.3 billion, whereas last year's quarter was 5.7, 117% increase. I know the estimates on EPS was like $4.31. So this is a huge beat by 40 cents. A 40-cent beat on EPS, mega monster, right? Awesome. 114% increase year over year. That's absolutely incredible. And this company's trading at, this company's trading way too cheap. It ought to be at least trading at a 30 forward PE. That would make it like a fair value. Look, you know what I'm saying? Somewhere 28 to 32 would be like a fair value. It's just not trading that. You know what I mean? And we'll go over that. First quarter, family daily active people was 3.24 billion on average for March 2024, an increase of 7% year over year. Which, how do you keep increasing that? That's incredible. Ad impressions delivered across our family of apps increased by 20% year over year. More and more people vegging out on the Facebook and Instagram, to be expected. It's addictive. It's very addictive. It's such a dopamine hit. Average price per ad increased 6% year over year. Total revenue and revenue on constant currency basis, 36.4 billion and 36.3 billion, respectively, both of which increased by 27% year over year. Costs and expenses, total costs and expenses were 22.64 billion, an increase of 6% year over year. We went over that. Capital expenditures, including principal payments on finance leases, were 6.72 billion. Capital return program share repurchases were 14.64 billion of our Class A common stock, and dividend payment were 1.27 billion. So they were returning, dang near $16 billion in cash, just short of $16 billion in cash. It'd be 15.91 billion to the shareholders. That's a big deal. Cash equivalents and marketable securities were 58.12 billion as of March 31st. Free cash flow was 12.53 billion. Here's my thing. When we think about like that, we have to understand that this company has a ton of money on that balance sheet, and that's a beautiful thing. Headcount was 69,000 as of March 31st, a decrease of 10% year over year. But the crazy thing is, didn't they just announce that they were going to lay off another 10,000 employees? Big deal. Big deal. That's going to give them another $1.4 billion back to the company, the bottom line, the top line, however you want to call it. It's going to give it back, which means they are executing better and becoming way more efficient, right? So, CFO outlook. We expect second quarter 2024 total revenue to be 3.65 billion to 39 billion. All right, so we're looking at probably, because the prior quarter was 28 billion or so. So we're looking around another 20%. Right below 20% year over year growth in revenue again, right? Okay, so I want to do one more thing, and I want to take a look at this. And we'll take a look at this, right? So we have Meta Platforms here, trading at a 19 forward PE. A 19 forward PE. Let's take a look at like companies that you can kind of compare it to. NVIDIA is trading at a 28. Now, NVIDIA does grow much faster. Let's be honest. Okay, let's take a look at Microsoft. Microsoft trading at a 30 and does not grow faster than Meta. Apple trading at a 23 forward PE, still not growing faster than Meta. Let's look at Adobe. 23 forward PE, growing slower than Meta by a lot. Let's look at the Googs. Googly goos. At a 20 forward PE. Still not growing faster than Meta. Tesla. We already know what's going on with Tesla. Trading at a 49 forward PE. So something's got to go. Either they're coming down or they're going up. There's going to be huge growth in that company. Let's look at the Amazon. Trading at a 33 forward PE. Not growing faster than Meta. Not on a percentage basis. And let's do like a Broadcom. That's another big market cap company. At a 23. So Meta's trading way cheaper than everybody. I don't know what you got to do or what you got to say. But what I'm coming to the conclusion here is that Meta's an opportunity. They should be trading somewhere between a 28 and a 32 4 PE. Let's be honest.